Ladies and gentlemen, welcome back to the Martin Dreyfus Show. We got some breaking news as the Fed has done a rate hike. Now, if you don't know what a rate hike is, it means that the cost of borrowing money is essentially going through the roof. Interest rates on mortgages, on personal loans, on business loans, on any form of borrowing money is going to go through the roof because now banks have to pay more to get money, essentially, in layman's terms, if you will. Now, the reason this is important is because the Fed is trying to stop the inflation in the U.S. economy. For the past around 40 years, we have been in a bull market in both the stock market and the U.S. economy, meaning we've been just kind of going upwards through the roof, breaking records every year and not stopping. Why is this a problem? Well, in the history of the stock market, even before this rating was created, every time we have had a bull market, we have then seen a bear market and seen an economic crash. A man, which I can't remember the name of, created the CAPE rating to determine how big and how bad these crashes would be. Before the Great Depression, we sat at a rating of about 32. At the dot-com crash 2000, which is the worst ever, we sat at 43, and in 08 we sat at about 28. Right now, today in America, our CAPE rating is sitting at 34. So the Fed is kind of looking at this and saying, how do we not let the economy crash? And that's a rate hike. That's increasing the amount to borrow money. And the question really only is how much are they going to raise those rates? And are they going to potentially do it again later in the year? Now, the effect on this will be widespread, but we'll get more into that after we kind of can get more details on this rate hike.
This morning, the Federal Reserve is expected to increase interest rates when it meets today. The hope now is to curb inflation as recession fears are growing. The Federal Reserve has kept rates at zero since the pandemic started. That's helped the economy by helping businesses and consumers borrow and spend money. New numbers show a 7.9% increase in the consumer price index just year over year. The cost for housing, for food and gas, all drastically jumping. However, relief is unlikely to come soon.
Almost any category you can imagine that the consumers spend money on, those also went up generally. So, yeah, next month I think it's going to be pretty painful.
The hope.
Unfortunately, that's just how it goes. I mean, the Fed has to mitigate damages, and unfortunately, the pandemic didn't just bring unprecedented health concerns and unprecedented day-to-day life concerns. It brought unprecedented returns in the stock market as well, and it also brought unprecedented amounts of backlog and money for like delayed rent, delayed business loans, amongst many, many other things. So when a stock for a business like GameStop, which is going out of business, is going through the roof, I mean, it was worth $5, less than $5 a year ago, and now it's worth, depending on the day, over $100 a share, even though their business isn't doing any more money, is unprecedented. Amazon's returns over the past 2 years are exponential, which is insane considering how large Amazon already is. So the Fed's looking at this like, all this rent hasn't been paid, all these loans haven't been paid, all these restaurants are definitely going to close. I mean, there was a report in Colorado that like in 2021, early 2021, like February or March, that like 80% of restaurants were going to close within that year. Not like 80% of new restaurants, which is normal, like 80% of restaurants were going to close. So the Fed is really concerned with how the economy is going to go. This recession fear is more of a depression fear because we've already been in a recession. That's the crazy part, is while we've had this bull market, we've been in a recession. We started in a recession during the pandemic, and we've been in and out of it, to my knowledge. So if a significant economic downturn were to take place soon, we would see, very similar things to 1929 again. It kind of, I think, make 2008 look like a, cakewalk, which is scary to say because my family lost our business in 2008. So you know, it's definitely something to be concerned about, and it's definitely something to watch, and it's definitely something to be aware of. If you're in the stock market, I would consider getting out of it because a lot of stocks are trying to bring back down to reality.